Property values are falling around the country. According to CoreLogic, property values nudged 0.1% lower in April, the seventh consecutive month-on-month fall since values started retreating in October last year. So how much lower will property prices fall? Are we near the bottom, or should buyers just hold off and wait? To get an understanding of what's going on in the market and where it's being affected, we're joined now by property expert Michael Yardney, the CEO of Metropole Property Strategists. Michael, good afternoon to you. Certainly, we are seeing that downward trend around the country at the moment, and we just saw an example of it then. An auction in Lidcombe was passed in unexpectedly. Is this something that's going to continue?
Hi, Sophie. Well, you're right when you say property values nudge down, because they're not crashing, they're not falling, but the headlines are showing lower auction clearance rates, less finance, house prices falling. So let's put it in perspective. Melbourne and Sydney had significant capital growth for 4 or 5 years where we had double-digit capital growth, so we knew it had to come to an end. But over the last year, Sydney property values are down less than 3.5%. Melbourne property values are up about 3.5%, but both those states in the last quarter had a little drop, less than 1%. Brisbane dropped a little bit as well, but over the last year has gone up. Perth, Canberra and Hobart have increased a bit. So we're just talking little fiddling around the edges. Our property markets are flat, Sophie. We're not in for a crash.
Now, you mentioned the rises and rises that we had over the past several years, so it's not surprising that they are starting to take a bit of a dip now, particularly with wage growth being so flat and inflation being so low and interest rates being so low. This big rise in property prices didn't always make a lot of sense, did it?
Well, no, they didn't, and it was unsustainable. But what drove Sydney and Melbourne in particular was a combination of the low interest rates and the fear of missing out, the emotion of seeing every week a warrior attack at auctions like you've been showing on your show. It was very different a year ago, where there was lots more people and scared of missing out. Today it's the opposite. It's the fear of buying a little bit too early. But the other main thing that has stopped the property markets in the last 6 to 9 months has been finance. Not that the people don't want to still buy houses, upgrade, move or buy investments. It's just the banks have been tighter, and with the Royal Commission and the banks now being allergic to risk, they're very scared of getting into trouble. They're being much more careful. So people are finding it harder to get finance. And as we've said before, residential real estate's really a game of finance with some houses thrown in the middle.
Now, you always are the one who's been erring on this. Your voice is as calm as when you explain it to us. You know, it hasn't been this landslide. Brisbane, for example, has actually gone up plus 9.9% over the year, but it's only dropped about 0.1%. So it's it's a slower slowdown, if you like. Why do you think that is up there?
Well, Melbourne and Sydney are the markets that overshot. And it was a time when you could just buy almost anything, James, and your property would be worth more in a month's time. You could go away on holidays, come back, and you were richer than you went away. But over the last couple of years, Brisbane has underperformed, and it all has to do with local factors. We all pay the same interest rates. We all have the same taxes. It has to do with local economy, creating jobs that lead to people coming in, having higher wages. So affordability's basically been the same all around, related to low interest rates. That's made it cheap to buy property, to either invest or own a home. But if you can't get a job, or if your wages aren't going up, that puts a damper on it. And so Brisbane's missed out for the last little while. But I think Brisbane's going to have its turn in the sun this year, James.
Good prediction, because we're speaking with Property Buyers Expo, which is on next weekend, and they're talking about great numbers being up there. Adelaide, Perth, Canberra, how's that gone?
Well, Perth is still on the downside. I was in Perth a couple of weekends ago, and it was disappointing to walk through the Hay Street Mall and see half the shops empty, the big stores empty, and people are down and people are dejected. In Perth, the value of their homes have gone down 44 months in a row. When you get that month after month, you've got to be down. And so there's going to be quite some time, even though it's hovering near the bottom, it's going to be quite some time before it picks up. Adelaide's just chugged along, and the Adelaide market was down 0.2% over the last quarter, and it's probably this year going to remain much the same. I think the leading market this year, James, is going to be Hobart, and that's really still based on speculation. There's not a lot of growth drivers there, but it's people chasing the next hotspot. But we've spoken about it before. This year's hotspot becomes next year's not spot, James.
Yeah, also, there's not necessarily the jobs or anything to support that growth in Hobart, but just people are seeing cheap properties and trying to snap them up. Now, what about the interest-only loans? Do you think that as that starts to take effect, that will encompass more and more people's finance abilities?
Okay, so what you're suggesting, Sophie, is that until recently you could get an interest-only loan and you were counting on capital growth to make money because you're not paying down any of your debt. Over the last couple of years, APRA have been slowing down our property markets, and correctly so, because if not, we would have had a crash. I think we're coming into a period, Sophie, where we've got lower capital growth, but not falling prices, because interest rates are still low. Every other cycle for the last couple of decades, it's been stopped because rising interest rates. So another way the APRA have restricted our property markets is by limiting interest-only loans to 30% of all the loans by the banks. But in the last little while, all the banks have been under that cap. So it's actually not the lack of interest-only loans that's creating an issue at the moment. It's actually serviceability criteria. Banks are looking much more carefully at not only your income, but your expenses. And in the past, there have been liar loans. We've spoken about that before, where people have not declared all their expenses. Going back before the global financial crisis, you didn't have to declare anything. There were no-doc loans and no-doc loans where basically you could just ask for money and they gave it to you. This is a much more responsible lending environment, which is going to mean our banking system is going to be sounder, our property markets are going to be sounder. So yes, the difficulty in getting interest-only loans will affect some people, but the banks are money shops. They actually want to lend money. They want to keep their market share. And I think that's one of the things that's going to underpin our property markets moving forward, Sophie.
Now, we're looking at prices just nudging back a bit in Melbourne and Sydney, but it doesn't tell the full picture, doesn't it? Does it? When you look at Sydney as a whole, it doesn't necessarily give you where the movement is, because the prestige suburbs are still holding their value, and it's sort of the outer suburbs that are slipping faster.
You're right, Sophie. There's not one Sydney property market. There's not one Melbourne property market. And CoreLogic break things up into deciles so you can see the cheapest properties and the more expensive properties. In Sydney, there are multiple markets based on the sort of property, based on geography and based on price brackets. The higher end properties, the most expensive properties, the top decile of properties actually are falling back, Sophie, because you don't need your $10 million trophy home when your $7 million home will still work. But those properties above the median, in the more affluent suburbs, the inner eastern suburbs, the lower North Shore, the inner west, you'll find auction clearance rates are still very high there, and well above 60% in many cases, while it's the outer suburbs where wages aren't going up. And where there were a lot of investors getting in chasing those cheaper properties, that now Sydney's suffering a little bit. So the high end and the very low end are where the price falls are happening in Sydney, but right around Australia, Sophie.
Now, based on the stats we're talking about, Sydney and Melbourne, you know, and of course we need to see whatever is happening around the major cities around the country, but these two are the powerhouses, if you like. You talked about it going down already 3.4% in Sydney, but how far do you anticipate this happening? What do you think is going to be going, and where are we in that cycle?
Well, that's a question a lot of people are asking, because they're wondering, is it too late to get in? Should I get in? Shouldn't I? Well, you've missed the boom, but any property you buy today, if you buy a well-located property in any of our capital cities, will look cheap in 5 or 10 years' time. You've been around long enough, James, to see that yourself too. But what's ahead? I see that finance is going to be an issue, and I see confidence being an issue. And so my predictions for moving forward for this year, I've lowered them a little bit. I think Sydney probably will still drop another 3, maybe 4% over the year. Melbourne prices really haven't dropped. They've actually peaked at the moment, and they may drop 2 or 3%. But again, like Sophie said, there's not one Sydney market, not one Melbourne market. So there are still pockets, there are still areas where it's going to do well. Brisbane, as we started to say, is going to continue to improve. Adelaide will remain much the same over the year. Hobart will most likely still be driven by speculators and investors, but it's a really small market, so it doesn't take much to push properties up, values up, but they'll drop when the impetus leaves from speculators and investors. Perth and Darwin still have got a little bit more to go. Now, this will depend a lot upon what APRA does, but APRA has already hinted that it's no longer going to interfere. It's ready to pull back now. It's done its job. It will have a lot to do with what the Reserve Bank does. And the predictions now have changed, and the suggestion is interest rates are not going to move either up or down, probably at least till 2020. So it's going to depend a lot upon the economics, jobs, population growth. But the budget that came out a while ago, the government's forecasts are all positive for property. Strong population growth, increasing jobs creation. The big thing that's missing at the moment, James, is wages growth. So until people can afford to pay more, I think property values are going to remain a little bit flat because interest rates, the impetus of low interest rates has worked its way through the market now. So the next thing to push property values up is really going to be the ability to earn more, the ability to pay more, have more disposable income. So that means demographics makes a big difference. In those suburbs where people have got high disposable income and good jobs and job security, A-class properties, A-grade properties, good homes, investment-grade homes are still selling well, James.
And do immigration numbers have much of a bearing on the property market? I mean, if wages are relatively flat, what's driving all that new house buying is people who are coming into the country, presumably.
Good point, Sophie. So our population growth, which was around 400,000 people last year, we added more than a Canberra to Australia last year, but we put it all around Australia. Well, actually, we didn't put it all around Australia. It went mainly, 80% went to Melbourne, Sydney and Brisbane, and the vast majority of it actually went to Melbourne and Sydney. 55% of our population growth, Sophie, is related to immigration, and a lot of people are coming now from China and India, and they're coming for the jobs, and the jobs that they're coming for in general are in Melbourne and Sydney. And these people initially rent until they find out where they are, how their jobs are, what's happening, but they're also interested in a different form of accommodation, and that's why our cities look different to 10 years ago. If you're a visitor from overseas and you came here, you wouldn't recognise Melbourne, Sydney, Brisbane, even Perth with all the high-rises. So a lot of these immigrants are coming and they're going to want to live close to where their jobs are, and they're happy to live in apartments because that's what their lifestyles are used to, and they're upwardly mobile people.
They don't expect the quarter-acre blocks that we're all looking for. Michael, thank you so much. You're a wealth of information, and I'm looking forward to the next time we can pick your brains on these subjects. Thanks so much.
Thanks, Michael. James.
A preview of our next Adelaide auction is up after the break, plus we'll go back to Brisbane for that Morningside auction.